Hello traders and welcome back to the Forex Geek. In today's video we're going to dive into a highly effective strategy that combines two powerful tools, the moving averages and the stochastic oscillator. This strategy is designed to help you identify strong trends and pinpoint optimal entry and exit points with precision. So whether you're looking to improve your trade timing or increase your consistency in the markets, this approach can give you a clear edge. Make sure to watch until the end of this video as we will cover everything from setting up your charts to managing risk and ensuring you have all the tools you need to trade this strategy successfully. So without wasting any much of your time, let's get started. Let's start with the strategy overview. Let's dive into the core of our moving average and stochastic strategy. This combination works exceptionally well because it merges trend analysis with momentum timing. The strategy uses two key indicators that complement each other perfectly. First, we have our moving averages, and I'm just going to add the moving average indicator to our chart. We'll be using the exponential moving average indicator, which is this one here. And the next indicator is the stochastic indicator. But before I add that, let me just quickly set the EMA up. So first we have our moving averages, which is we're going to be using the 50-day, the 50 period EMA and the 200 period EMA. So I'm going to quickly set that up. First, we have the 50 period moving average here, and next we have another EMA. Looking at the 200 period EMA. Okay, this is okay. Let me just change this color to red. So for the 50-day, the 50 period moving average is the moving average in the blue color, and for the 200 period is the one in red color. Okay, and you can see it on our charts. And the next, the second component is the stochastic oscillator set to 1433, and I'm just going to add this also. Ensure you save this video so you can come back and watch how to set up your charts for this strategy. Okay, so we're going to be using the stochastic oscillator, which is this one, and here we have the stochastic oscillator right here. And remember, we are using the 1433. Here we have the 1413. I'm just gonna go change this case smoothing to 3, and we have the 1433 setting. Okay, can you see the difference between the 1413 and the 1433? This is the 1413 and this one is the 1433. You can see the difference. So ensure you set your charts appropriately so that you won't make any mistakes. Now, this momentum indicator helps us spot potential reversals and continuation patterns. When price reaches extreme levels, the stochastic alerts us to possible trading opportunities. When the stochastic crosses below 10, it indicates that the market is oversold, signaling a potential buying opportunity. In this case, we are using 20 and 80. I'm just going to edit this. So let's use 90 for extreme conditions to be able to filter false signals. Okay, now we have it clear. When the stochastic crosses below 10, it indicates that the market is oversold, signaling a potential buying opportunity. And when it crosses above 90, it suggests that the market is overbought, signaling a potential selling opportunity. What makes this strategy powerful is the confirmation aspect. We never take trades based on just one indicator. Instead, we wait for both indicators to align, and this significantly increases the probability of success. Okay, the beauty of this strategy lies in its versatility. It works across all major currency pairs and multiple time frames. However, the best time frames tend to be the 4-hour and daily charts, where false signals are less common. So let's quickly dive into the charts and see how we can use this strategy, how we can trade with this strategy. So for a long position, if you're looking to buy with this strategy, the first step is the trend confirmation. First of all, confirm that the price is above the 50 period moving average. We can see one here. We have to first of all confirm that the price is above the 50 period moving average, and that the 50 period moving average is above the 200 period moving average. This alignment confirms a strong bullish trend. We have one right here. We have one here. I'm just gonna mark this out. So this is the price being above the 50-day, the 50 period moving average, and also the 50 period moving average being above the 200 period moving average. And when you see this, it shows that we are in a strong trend and we should be looking for buying opportunities. So after this, the next uh, confirmation is our stochastic signal. So wait for the stochastic oscillator to cross below the 10 level, indicating oversold conditions, and then cross back above it. This shift in momentum suggests that buyers are stepping back in. As you can see here, these extreme levels, I think I will use the 80 and 20 instead of the 90 and 10. Let's just use the default numbers, the 80 and 20 levels. Okay, as you can see right here, we have the stochastic going below the 20 level right here, indicating a time for us to look for buying opportunities in the market. Remember, the price is above the 50-day and the 50-day is above the 200-day also. So we should be looking for buying opportunities as we have this confirmation right here. So at the same time we had the stochastic signal, we also have this we also have price moving, giving us a rejection around this area. At the same time we had the stochastic signal. You can see price giving us a break in market structure to the upside, confirming the bullish momentum stepping into the market. And you can also see this engulfing candlestick pattern right here, also confirming this push to the upside. So we just have multiple confirmations, and after looking at this, the next step is to enter a long position as soon as the stochastic crosses back above the oversold level, while ensuring that price remains above both EMAs. So we could just quickly enter a buy at the close of our engulfing right here, with our stop loss level, our stop loss below that swing low right there, and we could target a 1:2 risk to reward ratio. You could set your stop loss, you could give your stop loss enough room to breathe below this swing low right here or below this one. The more room, the more space you give it to breathe, the better, because price can be very volatile at times, as we can see it happened right here. We have this sudden fall, sudden push to the downside. So we should give our stop loss enough room to breathe by setting it below this other swing low right here. So pushing this, we just set our take profit levels at 1:2, or we just put up a trailing stop loss and follow price all the way up. So this is for a long setup. Let me look for another example that best explains this. We can see another example right here. So first of all, the first thing is to confirm that price is above the 50-day moving average and the 200-day moving average, and we can see that happening right here. At the same time, we have our stochastic crossing back above the 20 level, giving us that signal, and you can see all of that happening at the same time. We have price breaking structure, right here, confirming the bullish momentum and showing buyer strength, more buyer strength entering the market. You can also see this consecutive green candles right here, showing enough buyer's strength in the market. So we could be looking to enter a buy at the break here, or we could just enter at this consecutive trade green candles. To be safe, I'll enter at the break of market structure, and we are looking at our stop loss below this swing low, and we can set our take profits. Remember, this is an uptrend, so we just ride the trend. Set our take profit levels at 1:2 risk reward ratio, or we could set it at our previous resistance levels. And that is it for a long position. So let's look at an example for a short position. For a short setup, it's basically the opposite. It's basically the opposite of our long setup. So you can see further examples here, price being above the 50-day and above the 200-day, and we look for where we have a confirmation of price going below the 10 and just crossing back, of the stochastic going below the 10, the 20 level in this case, and going back above it. And you can see that confirmation here also. We have the break of market structure and a buy from here. It's very simple. A stop loss below that swing low, and take profits at 1:2 or 1:3, depending on your preference. So that is it for this long setup. Okay, I'm looking for a sell setup, which I'm going to use to explain. Looking for a good sell setup, and I think I have seen one. So we can see price being below. The first step is trend confirmation. We have price below the 50-day and below the 200-day moving average, and we have the confirmation from our stochastic signal, the price going above the 80 level, giving us that overbought condition, and we should be looking for sales. So we also have here price giving us this rejection from this area, and the next thing we have is the break of structure to the downside. Now you can use multiple things for your confirmations. Some people like to use candlestick patterns. Some like to use the break of market structure, which I'm using here. You can also use candlestick patterns. You can also use break of market structure, whichever one suits you. But ensure that price is giving us this push. This is showing us that yes, sellers are stepping into the market, and we should be looking to join them in the sales. So here we just enter our short trade, and our stop loss above that swing high. I take profits at 1:2 risk reward ratio, or we could just set a trailing stop loss to follow our trades. Overall, from the daily time frame, we are bullish, and this was just a pullback, so I didn't expect this short trade to last really long, because we have been bullish for quite a long time, and this bullish momentum continued, as you can see. So this is a very good strategy which you can use, practice on your own. Remember, the key is patience. Wait for all conditions to align before entering a trade, as it will significantly improve your success rate. And as always, proper risk management is essential to protect your capital. Alright traders, we've come to the end of today's video. If you found value in today's content, make sure to like the video, subscribe to the channel, and turn on the notification bell so you don't miss any future strategies and tips. Happy trading, and I'll see you in the next video.